Hello everyone, how's it going? I hope that you had an amazing day and a profitable time with Palantir in the market, no matter where the ticker is. If you're searching about Palantir and have decided to click on my video, then chances are you're asking yourself the same questions that many of us have been asking. What happened? Can you scoop the bottom now? Is it actually the bottom, and can you benefit from the price action? So as we know, the job market over the past few years has been uncertain, to put it lightly, and inflation at the same time has been melting away people's money in places and countries that used to be deflationary for generations. When every source of certainty has decided to abandon us, we must use this opportunity to remind ourselves that we need to take a step back and to start working about our own financial independence. And in order to secure this future, we have to find the growth opportunities of tomorrow and seize the ones that can multiply our capital exponentially, increasing the money available for investment later. Essentially, we need to find the golden goose, and for many of us, Palantir is exactly what we're looking for. Because over the past few years, Palantir became so much more than just yet another tech stock promising market share and promising, very promising sectors in exchange of money. It has become a major company playing the role of the canary down the coal mine and a measurement of how much risk is the capital willing to take. It has enough clout and mystery around it to arouse the market's curiosity. It has also successfully, in my views, to convince people that it can follow new trends. It is a company that people would often view equally as the risk appetite of the market, like I said before, alongside Tesla or Nvidia. The fact that Palantir may rise and fall with tidal waves of risk capital is a limited but very useful predictability that makes it a crucial stock to follow in the market. And in this video, we're going to take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank you for coming to my channel and hope that you will enjoy your stay here and to come back for more content. If you like what you see, please consider to like, comment, and check out my channel for playlists of the companies I cover as well. With that being said, I hope that you're going to enjoy my analysis, and let's get started. Palantir Technologies has been experiencing some significant price movements recently. As the latest update, the stock's price saw a high of $21.95 and a low of $21.25. The movements from previous trading sessions show that the market is now having a lot of pressure pointing downward, as the expectation has been steadily building up over the past few weeks, as the price action has had a hard time moving up while the volume traded consistently below the average. At the moment, Palantir is showing signs that it can maintain the ongoing trend and that it's simply in a pullback phase, or at least this is what the market continues to believe in. And frankly, it is probably right. The current market consensus is that the sell-off pressure has a combination of motives, including the recent announcement that Palantir's traditional public sector contracts growth has been slowing down over the past year. The market reacted as a result and is still in the process of correcting its expectations and I would say digesting the news. Many used that opportunity to also exit their current position with the expectation that a price action will favor them in the future and to come back then. There are also additional volatilities to be expected as the S&P 500 will have a rebalance in June, and people are wondering if Palantir will be included in the bunch. So previously we identified a resistance level of $25, around which the stock has struggled to surpass, and a support level at 23 or 20, providing more stability to the price movements. These levels will serve as important markers for investors, indicating important potential areas for price reversals. The short-term trend for Palantir stock appears to be moving sideways with a slight downward tendency. It is attributed to a decrease in both interest and volume, while the overall trend remains bullish, the weakening momentum would suggest a potential shift in market sentiment. Regarding volume, the stock sees a trading volume that is around 30 million shares a day and has peaked at around 70 million shares with 30-day average volume of around 35 million shares. This area would suggest that a decrease in both daily and average trading volume and could lead to a potential loss of market interest, like further down. So, Palantir is currently experiencing a period of weakening momentum that has caused a pullback in a correction despite maintaining the bullish trend overall. The short-term price movements will indicate that the stock faces the resistance at $25 and it's probably going to find its support near the $20 level. And things may still fluctuate as the market conditions will still evolve. With that being said, the stock has gathered a lot of interest since its initial public offering IPO a few years ago, since its debut in the secondary market. The secondary market has seen the sentiment of Palantir to be overwhelmingly reactive, with investors very eager to capitalize on any trend and momentums, including the company's innovative data analytics technologies on the way up, so when things are bullish, and the wider tech sell-off, as well as something like a high interest rates environment and war and other uncertainties on the way down. Of course, Palantir's journey in the stock market has often been characterized by intermittent periods of bullish enthusiasm, followed by prolonged sell-offs, dipping at one point below the $10 mark. The one significant aspect of Palantir's price movement is its correlation with both fundamentals and macroeconomic news cycles. It's often observed that the news surrounding the company is closely reflected in the price action, leading to a self-fulfilling prophecy scenario. When the stock is on an upward trajectory, positive news tend to dominate the headlines, fueling further investors' optimism. Now, on the other hand, during downturns, the same news outlets will amplify that negative sentiment and to amplify the selling pressure as well by publishing a lot of articles that they know go in the direction of what their readers are thinking. So, currently Palantir has been able to maintain the bullish trend in the medium and long run, with diminishing margin increase and occasional pullbacks on the short term. The stock has shown resilience in recent sessions. The pace of its ascent has also been slowing down, indicating a potential shift in sentiment amongst investors. There's a growing need for additional catalysts to sustain the bullish momentum and to propel the stock to new heights. One factor that can influence Palantir's future performance is its status as a large cap stock. With its the market capitalization steadily increasing, Palantir is poised to solidify its position amongst the market leaders. Large cap status often brings increased institutional interest and exposure, and a broader investor base, much more patient, much more professional, and much more generous if needs be. All of which could contribute to more upsides coming up. So, despite the bullish outlook, it's also a good moment to remind people that Palantir will have its own difficulties. And in the meantime, while the target range of $30 to $35 definitely seems plausible, given Palantir's growth prospects and the market positioning, they are by no means guaranteed. The market dynamics can change rapidly, and unforeseen events or market shifts can derail the bullish thesis. So, with that being said, the factors from multiple aspects suggesting an overall bullish outlook, it is supported by the recent performance in the long run. But we have to remain careful and follow closely of what is going on in the short run. Can things actually bottom up? Is something that is going to matter a lot in a decision to whether enter or not in the short-term price action. When it comes to options, the available strike prices to put the range from from $22 to $24, and the call range from 21 to 23. This distribution would suggest a skew towards more call options demand than the put options, still kind of confirming the consensus amongst traders that Palantir's price trajectory is poised for an upward movement. But with that being said, both contracts have significant demand, and it is far less one-sided than how things once were portrayed just a few months ago. So options can be very useful tools for traders because they can provide additional revenue streams to the sellers and hedging opportunities against price volatilities, as well as increasing the speculative and purely calculated exposure to a particular stock to the buyers. So, given the current landscape of Palantir, I would say that it would be very smart for us to actually purchase a straddle. What this means is that it's very advantageous to people using that strategy if the market is known to be either volatile or going to be volatile in the short run. So the straddle strategy with out-of-money options can position the traders to profit regardless of the direction Palantir will take. And that flexibility is especially valuable in markets characterized by the uncertainty and fluctuating sentiments. So, investing in a company like Palantir obviously comes with opportunities and challenges. And many of them are sometimes easy to see, but not very easy to understand. One of the primary reasons investors are drawn to Palantir is its substantial growth potentials. It is positioned as a leader player in the data analytics sector, and it operates in a field with a lot of promises as far as the future of the economy is concerned. As businesses increasingly rely on data-driven insights to inform decision-making and to drive innovation, companies like Palantir are well positioned to capitalize on this trend. With this expertise in handling and analyzing large volumes of data, Palantir stands to benefit from the growing demand for data-centric solutions across various industries. Now, Palantir's current financial stability is a reassuring factor for the investors, and unlike many tech startups that operate at a loss, Palantir has already established a revenue-generating business model. This would reduce the likelihood of share dilution through frequent fundraising rounds, providing investors with a sense of stability and confidence in the company's financial health. Additionally, Palantir has demonstrated its ability to capitalize on popular demands and trends to generate significant interest from the market, especially amongst retail traders, through strategic moves and partnerships and also very well-timed announcements. Palantir has effectively enhanced its visibility and appeal, and it has successfully attracted attention from both individual and institutional investors alike. This ability to capture the market sentiment and leverage it to its advantage further underscores Palantir's potential to grow in this capital market known for its volatility. However, it's also not without its own risks and challenges, and one potential concern for Palantir is the possibility of upcoming legal contingencies, especially regarding the privacy and ownership of data. The company deals with sensitive information, and at some point it's possible that Palantir may face the regulatory and legal scrutinies, which can adversely affect its brand power, its profitability, and sometimes even its going concern. So, any negative developments in those areas may significantly impact the investor sentiment and the company's financial performance. And of course, another potential risk is a shift in the market narrative away from data and AI. These technologies are currently in high demand, at least in the market. Changes in government policies and regulations may very seriously impact the perceived relevance and potential market cap of companies such as Palantir that are surfing on those narratives. So, if the market begins to favor the sector or the technology that is no longer, AI, just like it's no longer EV or fintech, it could dampen investors' enthusiasm. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, It's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, considering the current market dynamics and Palantir's performance, buying Palantir shares can be a prudent long-term investment strategy for investors seeking exposure to the tech sector, especially as we're probably going to see the interest rates getting cut in either in late 2024 or throughout 2025. Palantir has demonstrated its resilience even in very bearish market conditions, indicating its stability and its potential as a significant company in the industry. It's also shown an ability to adapt and to capitalize on ongoing narratives, which is very crucial in a rapidly evolving landscape, and its capacity to seize opportunities also suggests that it may continue to thrive in a market that remains significantly involved with retails. Well, sorry, this is a weird way to say it. In a market, rather, where retail investors are still very significant in terms of purchasing power and the fact that they can respond very rapidly to ongoing narratives. So it's essential for investors to approach buying Palantir shares with patience. So given the potential market volatilities, I think gradually building up the portfolio is a smart move. And don't put too much shares in the beginning. Like what I'm saying is, don't start committing 80% of your capital now, right? Commit that portion of your capital for the decades to come, or at least for the years to come. This is, in my opinion, something that's probably the best way to go. In regarding the current environment, I would say that yes, if you don't have any Palantir position, you can start accumulating it, but assume that the price can easily fall at or even below $20. So it has to be structured in that manner.